Tip number 11. Invest in cryptocurrency. I am not saying to invest in crypto because it has given more than 300% of return. I am saying to invest in crypto because it is the future. One more important thing, don't invest your whole amount in cryptocurrency because it is a highly fluctuating asset. Invest about 10% of your portfolio in cryptocurrency. For example, if you invest rupees 50,000 monthly, then from it invest rupees 5,000 in cryptocurrency. And yes, there are too many cryptocurrency fraud out there. So invest only in trusted company like Bitcoin and Ethereum. And yes, another important thing is that don't try to time the market. Like I will buy when it will be low and will sell when it will be high. It will be better that you invest in cryptocurrency periodically. This means whatever the price of cryptocurrency you want to invest in, just invest 10% of your portfolio monthly. This will help you a lot by compounding in long term. Tip 12. Invest in gold. Gold is an asset which has been considered good in India for centuries. Even today in marriages, parents give their children gold because they know their value. But if you are young, then I would not recommend you to buy gold jewelry because you have to pay GST and make charges on it. And making charges are quite high. In the next point, we are going to talk about digital gold and the best investment of gold. Tip 13. Invest in the best investment of gold. Let's start with the advantages of digital gold. First of all, no security issues. The tension which you take for physical gold, you don't have to take that tension for digital. The company will store the amount of gold you are buying. Second is no making charges. While buying digital gold, you don't have to pay any making charges. Third, you can also ask for physical delivery for the gold which you have bought. But while doing this, you need to pay some charges and sometimes make charges also. And the last one is no minimum amount. Like while buying physical gold, you have to buy a minimum amount like rupees 10,000 or 15,000. But in digital gold, even you can buy at rupees 10. So let's see its disadvantages. The number one disadvantage of digital gold is that while selling it, you need to pay around 3 to 6% of the amount you're selling. That means if I'm selling gold worth rupees 10,000, then I need to pay rupees 300 to 600 to the company. This 3-6% is a charge known as spread. This charges includes insurance and security charges which the company has done for you. Second disadvantage is no indefinite holding. That means I cannot hold my digital gold for lifetime. After a certain period of time, they will urge you to sell the gold or to get the physical delivery of it. And we tell you one thing that if you sell it, then you have to pay capital gain tax and spread. And if you ask for physical delivery, then you have to pay some charges and sometimes make charges. So if you do not want to pay this much disadvantages, then there is another gold investment for you which can be termed as the best investment of gold. SGB, Sovereign Gold Bond, are issued by RBI multiple times in a year. There are specific dates on which you have to apply. The best part about this is that it is not all gold. It's a piece of paper which you buy at the price of gold. So let's go and see its advantages. There are no charges. The GST which you pay on other gold materials like physical gold and digital gold, you have to not pay it here. Another big benefit of SGB is that no capital gain tax is applicable to it. Even RBI also pays you annual 2.5% for holding this bond. The price of 1 SGB is equal to the price of 1 gram of gold. You purchase it at the price of gold and you sell it at the price of gold. Tip 14. Start budgeting. Maximum people go with flow. Calculation is most important. Budgeting does matter upon your income. Most people think I'm not spending on anything wasteful, so why should I start budgeting? The answer is do anything, but just do it with a budget. Even if your income is 10 lakh per month, then also you have to budget. If you do not do budgeting, then bringing financial success is really tough for you. Every successful person talks about importance of budgeting. Start using the 50-30-20 rule. In this rule, you have to spend 50% of your income on your needs, 30% on your wants and 20% on saving. You can divide 20% as 10% on saving and 10% on investing. Now do one thing after this video, check the current financial budget of your home. If your income is 1 lakh, then you must not spend more than 50,000 on your needs and 30,000 on your wants. And if your financials doesn't look like 50-30-20 rule, then make them according to it. If you are spending 80,000 on your needs from your 1 lakh income, then start reducing it until it comes to 50,000. Tip 15. Never spend more than you can afford. Most of the people fall in trap on showing it off to another people, and that's why they end up spending more than they cannot afford. If you fall into this trap, then it can be quite difficult for you to attain financial independence, because every time you would like to buy things for showing it off to people. If you can afford rupees 10,000 mobile, then please don't even think about buying an expensive phone even at EMI. You may think I can pay EMI easily, but you do not know how much bad is happening with you in long term. Tip 16. Always think before you spend. Most people spend passively. They never think while spending. If a friend says to them, let's do a party, they would agree without thinking about it. They would not think about their circumstances or their family matters. If you have taken a subscription to some app but don't use it, then next month during the time of renewing the plan, don't renew it. Instead, cancel it. Do not say, hey, it's only rupees 200. The thing is not of rupees 200. The thing is that you are not utilizing that 200. Instead, you can order some books from that 200 and learn something new by reading. Tip 17. Do diversification. Diversification means investing in different financial instruments. Like there are most people who just invest in only one thing, like stock, crypto or gold. But what if the thing in which they are investing starts going in loss? Then they would start losing their capital. Diversification is done so that risk can be minimized and the rates of profits can be increased. Experts recommend us to diversify our portfolio, invest in SGB index funds, and start investing in other financial instruments which you have knowledge of. Never put your eggs in one basket. Tip 18. If you are young, then don't buy a home. Most of you have just started earning, and your monthly earnings may be rupees 20,000 or 40,000. Then buying a home is not the best investment option. Buying a home is considered well, which is alright at its place. But if your monthly earnings are low, then buying a home is not good. You have to pay its EMI, pay maintenance costs, pay taxes and much more. So let's see in the next point that at what condition you should buy a home. Tip 19. Buy home but only on this condition. Most people, when they are 28 or 30, then it comes to their mind to take home, to get married and settle down, and then buying home becomes a kind of necessity. See, best way to buy a home is that you have 40 to 15% cash. Means if you are buying a home worth rupees 50 lakhs, you must have 25 lakh. And second, don't buy a big home. Buy home according to your needs and budget. If you are only 4 people in your family, then buying a big house doesn't make sense. If you will buy a big home of 1 crore or 1.5 crore, then its EMI will be too high, and which you may not be able to afford. That's why your EMI must not be greater than your 30% income. And yes, after buying home, stop taking unnecessary loans. Tip 20. Educate yourself. It doesn't matter whether you are from a tech or medical background. Money is a necessity for everyone and learning about it is necessary. Don't invest in FOMO that other people are investing, so I should also do the same. Every day gives 1 hour to this subject. Learn about new investing options, watch new financial tips, read books. This is the most important point that you must have to follow it. Tip 21. Do not fall in upgrading your lifestyle. Let's see an example. It's Diwali and you bought a new phone worth rupees 20,000 and you paid rupees 10,000 as down payment, and the rest will be as EMI. After paying the EMIs for 6 months, you cleared the debt. Now a new phone got launched in market worth rupees 40,000. You thought your phone is old and you will sell it for rupees 12,000, and you will buy that 40,000 phone on EMI and will pay the EMI for upcoming months. This is a scenario of upgrading lifestyle. You can also think it as step out of one loan into another. You don't need a phone and your current phone is working well, and still you are thinking of getting a new phone. Then you are getting in the trap of lifestyle upgradation. You can do this with the things which help you to earn more. For example, if you are a video editor and you need a new PC, then go and definitely buy, because a better PC will help you to earn even more. Never ever buy the things which you don't need. Tip 22. Compete with your neighbor in saving, not in spending. As we said earlier, you buy after seeing other people, but this is very wrong. because you would buy a costly phone or costly car to show off your neighbor. But after showing them, you have to pay the EMI. This is very bad for your finance. It will be better to compete with your neighbor and friends in savings. Tell them why showing off is bad and say them that now every week we will talk about our finances and portfolios. If you and your friends do this, then they will get the motivation to invest and to learn about investing, which is very good. Tip 23. Define the amount of EMI. As we have seen in the 50-30-20 rule, you have to spend 50% of your income on your needs like rent, clothes, spend 30% on your wants like eating out, partying, paying EMI, and save and invest 20%. An important point which I want to tell you from this is that your EMI account must not be greater than 30% of your income. Whatever you pay EMI for, education loan, personal loan, all that together should not exceed 30% of your income. If you earn rupees 10,000, then all the EMIs must not be greater than rupees 3,000. I am saying this because if you do not do this and your EMI covers 40 or 50% of your income, then you are playing a high risk game, or you will face a shortage of money all the time, and sometimes you will also ask yourself where my earning goes. And the biggest thing is because of this you will not even able to invest. Tip 24. Understand the difference between asset and liabilities. Assets are something that puts money in your pocket whether you work or not. A liability is something that takes money out of your pocket. Middle class buys liabilities that they think are assets. Assets can be anything which is generating money even without you, like a YouTube channel, rental property, income from stocks. Keep doing your job, but buy assets before buying liabilities. All the expensive things rich people buy, they do not buy from their earnings but with the earnings of their assets. Tip 25. Never say I can't afford it. Saying I can't afford it programs your subconscious mind negatively. Instead of I can't afford it, ask yourself, how can I afford this? By saying I can't afford it, your mind shuts down. Whereas by asking questions to your mind, thinks about the ways by which you can earn more. It doesn't mean that you buy each and everything which you want, but my motive is that you ask questions from yourself and your mind will definitely answer. Just like working out in gym is an exercise for the body, similarly asking yourself such questions is an exercise for the mind. We will cover the remaining tips in the next video. Please like and share our video. Comment which is your favorite tip. Subscribe our channel to get this kind of videos regularly. And finally, thanks for watching.